In the past year, global energy prices have hit record high. At the same time, generous renewable subsidies are offered in the West. So what happens when investment capital is reallocated to the West rather than the developing countries where it's most needed? To take us through a panel on this topic, we will soon welcome on stage Mark Davis, EVP of Renewable Energy in Norfund. But first, take a look at this video.
Particulate pollution is one of the greatest threats to human health. When you look at the AQI levels, Delhi is the most polluted capital in the world.
The normal ppm levels are 50 to 80 during October to December. These levels reach to about 1,000 ppm. So you can well imagine the kind of problem we are facing here.
SAIL as a company is bringing about a revolution with its innovative solutions and alternatives to stubble burning, which is a major factor behind pollution in northern India specifically.
In this northern part of the country, 45 million tons of paddy straw is being burnt every year. Farmers have to burn the crop because they have to sow the next crop in the next 20 to 25 days.
ਬਾਕੀ ਜਦੋਂ ਸੇਲ ਪਲਾਂਟ ਲੱਗਣ ਨਾਲ ਵਾਤਾਵਰਨ ਨੂੰ ਬਹੁਤ ਜ਼ਿਆਦਾ ਜੀ ਪ੍ਰਦੂਸ਼ਣ ਦਾ ਫਰਕ ਪਿਆ ਜੀ ਅੱਗੇ ਲੋਕ ਅੱਗਾਂ ਲਾ ਆਉਂਦੇ ਸੀ
ਬਾਕੀ ਆਹ ਪਰਾਲੀ ਸੇਲ ਹੋਣ ਨਾਲ ਗੱਠਾਂ ਬਣਨ ਨਾਲ ਵੀ ਬਹੁਤ ਫਾਇਦਾ ਹੋਇਆ ਜੀ ਸਭ ਦਾ ਬਿਜ਼ਨਸ ਵਧੀਆ ਚੱਲੀ ਜਾਂਦਾ ਜੀ
SAIL as of today is using about 1 million tons of paddy straw, which makes us the largest off-takers of this paddy straw.
We have a background of a farming family, so we know the impact and the problems the farmers are facing.
Waste to energy is actually a very interesting concept. We got the technology from Denmark. That is where we started our journey from. We are operating about 80 megawatts. Another 90 megawatts is under construction. And we plan to do another 500 megawatts in the next 5 years. And this energy is supplied to the national grid.
55 to 60% of the revenue goes directly into the rural economy.
We've been working with 20,000 farmers. These farmers have been able to start small businesses through paddy stubble collections. Because of this paddy stubble burning, the air quality is deteriorating day by day.
It affects as many as 600 million lives.
We need to save our environment, our biodiversity, our health, our soil, our water, and still make money out of it.
This sector involves a lot of capital cost. When you have a solid fund like Norfund standing behind you, it gives you a lot of confidence.
The SAIL investment is undertaken by the Norwegian Climate Fund for Renewable Energy. And this is a fund established by the Norwegian government, managed by Norfund, with the explicit objective to assist developing countries in their transition away from a fossil fuel-based power system to a renewable one.
All the stakeholders, the farmers, the local people, the government especially, funders, all of us have to be aligned in order to promote such a technology.
ਇਸ ਤੋਂ ਵੀ ਉੱਪਰ ਜਾਣ ਦੀ ਸੋਚ ਆ ਸਾਡੀ ਵੱਡਾ ਬਿਜ਼ਨਸਮੈਨ ਬਣਨ ਦੀ ਉਮੀਦ ਆ
The targets for a country like India are huge. The government is seeking to establish 500 gigawatts of renewables by 2030, which is more than tripling the installed capacity of renewables that they have on the grid today. So the Norwegian Climate Fund is a contribution to this goal. The SAIL investment itself is expected to avoid something like 2.8 million tons of CO2 per annum, which is about the same as 1.4 million petrol cars operating on the road today. As Norfund, we're very proud to be associated with SAIL, and we think this is exactly the kind of investment the Climate Fund should be doing.
Although we won't be able to solve the entire problem, but it is showing a way forward to the world that yes, this paddy stubble problem can be solved, and as a company we are willing to contribute as much as we can to the environment.
India is a country of large numbers, and never more so than in the energy space. At the UN Climate Conference COP26 in Glasgow in 2021, Prime Minister Modi announced the ambition to reach 500 gigawatts of renewables by 2030, which is from around 180 gigawatts today. With 50% of all electricity in the country being generated by renewables, and a reduction in emissions by 1 billion tons CO2, with the goal of reaching net zero by 2050. In addition, the country has an ambition to produce 5 million tons of green hydrogen by 2030, which adds an additional 125 gigawatts of renewables. Is this remotely possible? To find out, I've got with us here today Vivek Subramanian, one of the founders of Fourth Partner Energy, one of Norfund's investees in India. Teddy Piskog, well known to the audience today as the CEO of Skartek, Norfund's partner over many years in the renewable space. And joining us online, we have Sandy Kera, who is the CEO of Enel Green Power in India, whom Norfund has invested with in 2022. I'd like to begin with you, Sandy. The government has announced that they will be stepping up auctions to around 50 gigawatts of renewables per annum. And just for those of us who get our megawatts and our gigawatts a bit confused, to put this in context, the entire power system in Norway is about 35 gigawatts. So 1.5 times that every single year. The last 5 years, we've seen in India about 11 to 12 gigawatts being commissioned. So we need to quadruple that to meet these goals. And I've heard it said that the Indian philosophy is that if you reach for the stars, you might just make it to the moon. So, Sandy, are we on the way to the moon? Are these targets realistic?
For inviting me for this event. On the face of it, the numbers and the targets seem very daunting and ambitious. But when we look at it in the context of where we are in the country, I mean, India is at the cusp of a significant economic transformation. We are arguably the most populous country in the world. 1/6 of humanity resides here. And it is also home to the youngest populations in the world, which means a rapid and equitable economic growth is critical to meet the lifestyle and growth aspirations of 1.4 billion people. Reliable, affordable energy are key elements to drive this growth. The message is clear. The path to development for India cannot be fueled by carbon-spewing fossil fuels. And from a cost standpoint also, it makes sense. Therefore, the momentum for renewables is irreversible. And also then there is the element of sustainability. So with all the micro fundamentals contributing to growth which are in place, and the increasing electricity demand backed by a large domestic consumption market, with the political environment which is very stable and a robust regulatory and policy framework offering tailwinds, we can expect, I'm very optimistic that we will meet the targets. And then, as you said, I mean, even if we achieve slightly less than this, doesn't really kind of move the needle backwards too much, because the country needs electricity. I mean, affordable and reliable, sustainable electricity is the need of the hour. And I'm very optimistic. Of course, there will be headwinds in terms of execution challenges, cost of capital, high inflation, etc. But we are on the right track to make this daunting task achievable.
So Sandy's bullish. Let's ask Vivek his view. We're on the way to the moon. Is it Apollo 11 or Apollo 13?
We're on our way to the moon, and that's an achievement by itself. So I'll just put this in context from a different perspective. I think Sandy referred to the government's initiative to want to add as much capacity. I'll just change the narrative a bit. So if you look at India's power distribution, we are about 70% of our power still is generated from thermal. The air quality in 15 of the top 20 cities is appalling and has been ranked to be something that needs to be compulsively worked on. And as we all know, power is a big contributing factor to that, apart from new construction. When we look at the Indian power structure, the current structure is such that, across 30-odd states in India, each state is a distributor of power. So it's a government-owned entity that distributes power to the consumers. We supply to what is called as the C&I sector, which is the commercial and industrial sector, which is basically to businesses. Businesses consume 50% of the power in India today. Look at what has happened in Europe. Across the board, if you talk to any of the large multinational companies in India, the one thing that they are very keen before anything else is to control their energy destiny for the next 20, 30 years. Because they've seen in Europe the flare up in prices is detrimental to their survival. In this context, What we offer to them is very simple offering, right? So one, they don't have to put money on the table. We are building the plant, operating it, and supplying power to them. We're supplying long-term power contracts for about 30 years, 25 to 30 years, which means that they have a price of power that they've locked in for that duration. That price of power, depending on which state you operate, is between 20 to 50% cheaper than grid price. So there's a business imperative to want to do this. The only impediment in all of this was historically policy, where the government felt that, at least the state governments, that they were running these utilities themselves. These customers are now going to get off their grid, and therefore they will lose out their customers. But when India has sort of changed its entire narrative and said, we need to show this transformation in our own market, not just because we lead the International Solar Alliance of 170, 180 countries, but also because, like I just said, we need to do it because otherwise our children and our people are going to suffer with the quality of what we are living in. So the imperative is clear, the economics are in favor, and therefore when we historically would do 5, 10 gigawatts a year, to make that transformation to 3 to 4 times its scale, from a business case perspective, there is no stalling. The classical issues of execution still are very much, as we like to define it for our business as well, demand is not the issue, supply is. And in supply, we sort of club manufacturing capacities, policy, availability of land, components like wind turbines that need to make this happen. And of course, and most of you all will be familiar with this last point, which is capital. So if we can make all of these constituents of supply. I'm going to stop you there because we're going to come back to the capital issue in a moment, sure.
Vivek. And I think both our Indian speakers seem bullish. The government's pushing, the market is pulling. But clearly, if you look at, I read that if you added up the pipelines of all the largest dominating renewable energy companies in India today, it added up to about 50 gigawatts, 1 year of targets. So clearly, the country needs more players, I think, as you're alluding to, Vivek. So, Teddy, you're a company, global company that can invest in many different markets. You look at India, is it an attractive prospect or a scary one? How would you rank it?
Thank you, Mark. No, certainly, it's from our point of view, it's not scary market, but clearly we might have a slightly more sober perspective on the market than our friends here. Clearly, if India is going to reach the stars, reach the 500 gigawatts, a lot of capital is required, and also a lot of international capital is going to be required. And even though there are many segments in the Indian market, what is it that can potentially drive significant growth? That is the auction system. And I think also that is the focus of the Indian authorities. And in the auction systems, currently, I would say that the return levels are tight. That's sort of a nice way to put it, I think, at least from an international point of view. And they are tight because the price levels are driven by a certain auction system where you have a winner, and then in order to be awarded, there is only a 2% gap that you can be above that winner. So in a sense, you could think that there is a way of controlling the auction system so the prices are kept low. In order to attract more international capital, especially in a situation where we see that international capital is seeking the more safe havens in terms of investments, I think it's important to see that we are able to generate decent returns on capital, also within the auction part of the local regulation.
I want to come back to that a little bit later, Terje, because clearly we're moving now from the gigawatts to the gigadollars. Bloomberg, which is probably the world's leading analyst for the renewable space, they have estimated that meeting government's goals would need financing of around $30 billion per annum to achieve this. And that's, in addition, you have all the other investment in the network. This is just the generation component. And we have been seeing record levels of investment in renewables in India. Let's not doubt that, but it's still only about a third of what Bloomberg is estimating is the requirement. So let's ask our Indian participants here. Vivek, I mean, is the local financial markets, are they able to deliver that kind of volume?
No, because for a capital, so a long answer to your short question, Mark. When we look at a power plant that needs to be installed, we have to look at the entire mix. We need equity, we need MES financing, project financing, working capital, the works. I think India's project finance lending market has now got to be quite deep. We've been in business for 13 years in India doing this. I would say in the last 3 to 4 years, we've been pleasantly surprised at the extent of initiative that all the banks and NBFCs are non-banking financial institutions are doing so with a focus on renewable energy. So I think debt capital is available. We need riskier capital to come in. And riskier capital would need safeguards, would need clarity on how it is being deployed and some sense of how and the returns would be eventually panning out. I would say that this is definitely a market that needs some bridging in the form of international financing coming in and developing that market even further. We also, as it happens, Mark, operate in the neighboring markets of Sri Lanka, Bangladesh, Indonesia, Vietnam. And I know those markets from a project finance perspective are very shallow. So I feel very good about what we're doing in India, but for those kind of numbers we're talking, we're still a little far away from a capital availability perspective.
Yeah, in fact, I have, it is said that approximately 50% of the debt in the Indian renewable space is foreign debt. Sandy, from your perspective, our recent project we invested last year, the TAR 420 megawatt solar project, that was international financing. And one of the challenges for international financiers in India is that you have prices under the auction system which are, first of all, paid in rupee. Fair enough, it's India. But secondly, they're not indexed to inflation, they're not indexed to exchange rates. How easy is it to get this kind of debt financing into the Indian market? Sandy?
Yes, Mark. So, of course, you've hit the nail on the head. I mean, the effective returns the real returns become much lower for foreign investors. Owing to high competition, which means that the tariff has very little margin. And then it is a hyper-competitive market, as you said, and it's very price sensitive. So return expectations overall are lower. And then since the earnings are in local currency, therefore currency risk does impact. Of course, there are you have contingencies and you plan for the worst, but there's still always execution challenges leading to delays and then cost overruns and interest costs going high during the construction period. So there are those constraints that the market operates in. As we are maturing and growing, these things should even out. But the key challenge, I think, is the quantum of capital that even was alluded to earlier by Vivek, which is we will not have enough capital in the country. Debt, for many, many years, we had what we call limited recourse, pure project finance and non-recourse financing was far and few between, with international banks coming in, international lenders coming in, multilaterals. That has been addressed. A big challenge has been that local domestic banks and financial institutions provide debt on a floating rate basis. There is no fixed benchmark. The advantage that multilateral funding agencies bring in, and that's what we experienced in our THA project that you talked about, Mark. We got long-term fixed rate financing, of course, with currency swap within a period of time. With now, what is happening is international banks are now looking at new structures in India. Earlier, everybody wanted 20-year financing for a 25-year PPA, even albeit it was floating rate funding. But now, with shorter tenor financing becoming popular, 5-7-year financing structures becoming more prevalent, that has meant that international banks can now play in India, and maintain their asset liability mismatch issues as well. So with that, we see a lot of debt financing available, and as Vivek said, we need all the international financing to come in, with players like Norfund supporting the energy transition in India, and with their focus on ESG and responsible investing and IFC principles. I think that can be a catalyst to bring in other investors on board as well. So yes, with the kind of massive investments required in the country to reach the scale of growth we're looking at, all and every ounce of penny that we can get from anywhere in the world is welcome.
So
And
all hands on deck is what you're saying to achieve this. And in fact,
yes, yes. Just one mark last point that also I think that the India is a bright spot right now, and it is attracting capital despite the issues other and the investment opportunities in other countries as well. And what we've also noticed is that investing in India in renewable energy does not make headlines anymore. Not investing in India grabs headlines for the wrong reason. So this is the marketplace to be in.
It's a place to be, right? We've spoken about project finance from our guests here, but it's also true that the green bond market in India, top $10 billion in 2021, continues to grow. Terje, you are one of the leading companies in Egypt launching a green bond for the solar projects there successfully. I think the first of its kind in Egypt. Is this a kind of instrument from your experience that could work for Scatec in India, or was it like pulling teeth?
Well, definitely to answer your last question, doing a green bond in Egypt was like pulling teeth. Clearly, it was a very complicated process where there were a lot of different parties involved, and we needed to renegotiate contracts with the authorities. We needed to get EBRD and MIGA in with risk mitigation structures in order to get the green bond to becoming investment grade, and through that being able to bring in institutional investors into that structure. So that, I would say, was a piece of work. When it comes to funding projects in India, I think that we have to look at all the different options that we have talked about here today. Obviously, going with the local funding structures where you have limited recourse, that's at least from an international point of view, a relatively capital-intensive way of doing it because you have to provide the guarantees behind it. So to the extent that we are able now to sort of bring in more international financing and doing it on a pure non-recourse basis, I think that is good. And I think that's the first step. And then as a next step, I definitely see a potential also on bringing in green bonds, for instance. But I think that has to be done more on a portfolio level rather than doing it on a project-by-project level. I think there you will easier find the level of certainty.
Which I think is what is the case. That is the case in India. I think that's where you are seeing these bonds is more on the corporate level rather than the project level. But just continuing with you, Terje, I mean, let's think about what Norway can do in this context. I mean, Norway is a relatively open economy, imports, exports, and definitely one of the things we have to export is our capital. We're a capital-rich country. Norfund and the Climate Investment Fund, we have invested around 2.4 billion kroner in the Indian renewable space. I'm afraid that's kroner, Vivek, not dollars, but it's a start at least.
It'll get.
And we could also see that if you look globally at the largest sovereign wealth funds and pension funds, 8 of the 10 largest funds in the world have yet to invest in renewables in India, including our own sovereign wealth fund, by the way. But Terje, if you look at Norway, what can Norway Inc. do to try and help India meet its goals here?
No, I think that Norfund should still think about itself as a front runner in this situation. I mean, clearly the role of Norfund is to be a catalyst in terms of generating additional investments into countries like India. On top of that, obviously, we will at least look to Norfund also to contribute to risk mitigation, both sort of on the return and the early development stage. But I think specifically in India, where part of the key challenge is to get enough capital into investing into the country, being a front runner, taking some of those early investments, but also at the same time looking at opportunities for accumulating projects, recycling capital, and through that basically paving the way for additional capital coming into India over time. I think that's an area I would look for Norfund also to participate. And
demonstrating it can be done in a sustainable and profitable
Mark,
way.
can I add a couple of points to the same question? I mean, just from an Indian perspective, what we look at. So I'll give you, so there are 2 ends of the spectrum. So one, again, I go back to the same statistic. Look at years of India running its power sector, and almost 70% of our generation still being thermal. You therefore go to the power minister and speak to them. Most often than not, it takes a lot to get them to think about renewable energy. You're a country that has shown that it can be done, and you'll have different renewable energy technologies that work together and integrate themselves, right? So you have hydro, wind, solar, all of that working together. And the other end of our spectrum is our consumers, our fairly large corporate consumers, who are saying, I don't want just solar power in the day, I want you to give me round-the-clock renewable energy. So what are the technologies in play that are prevalent in these markets that can be brought into a market like India, and it can show that it can move out from its traditional sources of supply and move towards renewable energy is an equally important part of the value that you all can bring to the table.
And we have seen huge transitions in the last couple of years. And I mean, I thought to ask Sandy, actually, we've seen some of the big Indian corporates pivoting away, well, into the renewable space, developing power plants, developing technology, supply chains, and so on. I mean, what's driving these big Indian corporates to start playing in the renewable space? Maybe you can tell us, give us some little insight into these corporations. What are they doing and why?
Yes. So these large corporations, I mean, it's growth around the spectrum, right? The large corporations have been traditionally very diversified conglomerates looking at all and various sectors to invest in. This is now probably the sunrise sector and attracting a lot of attention. Also from not just in terms of greenwashing their annual reports and feeling good about it, but as we discussed earlier, it makes business sense from consumption side, demand side, and also from a business standpoint. And also the ability of these companies to attract capital. Some of these large players who've been working with financiers and investors in the past, traditionally, also now very clearly understand the writing on the wall that financiers will invest in businesses which are kind of disrupting and addressing the issues of climate change. And some of these companies have a great opportunity to now transform themselves and move to the next level. So that's one of the key elements. And the biggest, I think, inputs that can come again to talk about the point that you alluded to earlier on what can we learn from other countries and then take support from countries like Norway is, of course, technology. Climate action has a direct correlation with cash flows in future. So adoption of clean technology or resource efficiency or decarbonization will be the key, and access to low-cost finance. So these companies do have access to these elements and want to tap that. From the, I want to bring one element which is very important to kind of address, which is that as we look at, as large corporations, as we look at this energy transition and moving away to a more inclusive and fair transition, we have to make sure that we don't leave anybody behind, right? Need to look at the needs of the social categories most exposed to this change that the country is going through right now. And especially for communities.
The just energy transition, as they say, they call it. Quite, yeah. So that is a theme, definitely. That is many countries are grappling with. Just conscious of time, I'd like to just close out the discussion with a last question for Terje. I mean, Bloomberg reports that the average post-tax equity returns in the renewables is 13.3%. That's a very accurate number. I doubt it's exactly that in rupees. But is it enough? Is that what's going to attract international capital to India, or is there a great sucking sound of the capital rushing over the Atlantic to the US?
Well, I don't think. I think that in terms of the sucking sounds, as you as you talk about it, I think that's within certain sectors, but that's not across everything, and it's not necessarily related to IPP investments. But I think we as a company, if you take our perspective on this, we don't look at averages. Obviously, as a private company, we look for the situations where we are able to generate a good return for ourselves. And as we said initially, currently in India, that's not necessarily in the SECI auctions. That's not necessarily going in and trying to compete based on cost of capital with NTDC and other state utilities. That's seeking the other types of situations, like for instance in the CNI segment, like for instance on hydropower, where we have special capabilities, or also in relation to hybrid situation where you combine different technologies, for instance in round-the-clock type of tenders. So that's the areas where we will seek, and in terms of averages, I don't think 13.5% is going to do it in terms of attracting all that capital that is required.
Good. Well, I think that brings us to the end of our session, and I don't think we can solve India's energy problems in 30 minutes, but we had a good go, guys. It's going to be a fascinating journey the next few years as India seeks to meet their very ambitious targets for 2030. So I encourage you all to stay tuned to developments in India, and I'd like you to all join me in giving a hand to our guests on the panel today.